million. Of course, companies have to raise their prices. So to just attack corporate America for like, oh, you've raised your prices, you greedy monsters. Well, the money supply went up a ton. They had to raise their prices to make the same amount of real money, right? If $5 used to be $3, you have to charge $5. Like if you used to charge $3 and now $3 is $5, you see what I'm saying, right? Anyways, it frustrates me to listen to these guys. So to be honest, I think most of what Jerome Powell has said, he had a couple comments that were taken a little bit more hawkish, and I think we're going to transition here. Thanks, James, for pulling that up. I think we missed, to be honest, the initial publication from Jerome Powell. However, I did do a little research. We've got Powell saying, I'm going to just kind of read out some things that I found. He said the Federal Reserve will not reduce the target range for the Fed funds rate until there's greater confidence that inflation is sustainably moving towards the 2% goal. So, when Jerome Powell puts together these speeches, right? When they are, putting together his choice of words, his choice of what he calls the most attention to is really what people are looking at. They're, what does he sound the strongest on? Well, saying that they're not going to cut the Fed funds rate until greater confidence in inflation. Is that new? Not really. He's been saying that for some time. However, maybe the way he said it was taken a little bit hawkish. The committee will continue to assess incoming data and make decisions on a meeting by meeting basis, being cautious not to reduce policy restraint too soon, which could stall progress on inflation, or too late, which could weaken economic activity and employment. Key CPI and PPI data are also due this week. So we'll see. There we go. Okay, so in terms of a market reaction, we're going to get over to Chris Pulver in just a moment, hear what his thoughts are today. But I would say, you had a little bit of a mixed reaction. The dollar index jumped and then came back down. Gold, same story, dropped and it's bouncing a little bit. NASDAQ dropped, came right back. I think it's going to be just a formal conversation with Congress. And to be honest, so sometimes we watch these. I've watched these in the past, but I think I'm not going to watch it today because I remember the last time it is literally just person after person giving a political speech and hardly talking to Jerome Powell. And he just kind of has to sit there. So anyways, we're going to now transition. We're going to watch a quick break and then we'll be joined by Chris Pulver to hear his thoughts on what the market is doing. Just to note, if you are looking for the speech or the conversation going on right now, we'll try and keep you updated with headlines, things that actually matter that are coming out of that room rather than people pushing their agendas. So be right back and we'll have Chris Pulver on the show. Stay tuned. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the Edge Finder. The Edge Finder allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The Edge Finder also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The Edge Finder also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the Edge Finder today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream. All right, Chris, and we are back for another episode. How's it going, man?
It is going well. I think the secret phrase for this week for me is hedging.
Interesting. Elaborate. What are you hedging with?
Well, I did some VIX hedging yesterday as well as ES. So hedging with the S&P futures market. I'm
Are you
trying to make hedges.
buying calls on the VIX, or what are you?
I'm buying. Yeah, I'm buying a call. So I did a couple things. I've already got some in the money calls at $10 and $10.50. So that's essentially like full. If price goes up, then it'll be like essentially owning the VIX.
Hmm.
But I also went out to the end of September and did a $20 out of the money call. I paid $1.65 for it. If I'm anywhere right on this, if we get a move on the VIX from, let's say, 12 and change like it is now to 20,
Yeah.
that's really the move that I'm after. So I could turn about $1.65 into, maybe $5 to $6 of credit. So it'd be about a 3 to 4 to 1 hedge. My 1050 call, what would be, I mean, I'm trying to think here. I can turn a 450 debit into a 950 credit if we poke to $20. The bigger hedges for me are the ones that are the ES, so your S&P E-mini futures. Those pay like 20 to 1. They're way out of the money, but I did it where it cost me in my margin accounts, cost me nothing. I actually hedged for $100 credit that pays up to about 20 grand in hedging. And then I also did about a $350 debit in my IRA accounts because I wanted to make sure that the buying power wasn't sucked to nothing. So, but same thing. It's like I pay $350 for a hedge that pays out potentially, 20 grand. So, anyway, I'll explain why. I mean, you said elaborate. So, I mean, could we stretch this week, Nick? Nick, we have CPI data on Thursday. What's the last CPI move that we had? We just had a massive gap higher, right?
Yep. Because it was a good number, I think, last time around.
So it was a good number. The forecast for this go around is 3.1. I mean, you're sitting here talking about what Powell's comment is, what the testimony is going to be for the next 2 days, but it's all going to boil down to what is inflation on Thursday, what's CPI data, what's year over year. Look, 3.1 would be okay, but it doesn't change. Like, it's not a new low. I mean, if you pull up the Edge Finder, what was our lowest over the last 12 to 24 months? Probably 2.9. Was that at one point we're like, oh my gosh, we have so much deflationary pressure now? Does that sound right?
Yep. I think, yeah. So we came down to 2.9 and then have now kind of bounced back. And really, if you're looking at CPI, it's been flat for for some time here. It's been really unchanged over the last year. The difference is if it kind of depends which way you slice it up, because if you look at the PPI or if you look at PCE, they're down in the 2s, and then other people will say, well, you're still in the 3s on CPI, and then other people will say, well, unemployment's taking higher. I mean, there's some debate here as to whether or not the Fed is going to. I think the big swing would be if the Fed takes more seriously the rising unemployment at some point. I don't think we're quite there where they're going to really show red flags because we're still coming off of like multi-year lows, in terms of unemployment rate. But yeah, I mean, it's interesting, Chris. I mean, it's an election year too. Is it going to just keep pumping higher if we see a rate cut? That's the other thing is, Chris, I'm only long. I don't know, since I've last talked to you, I ended up closing out my calls on XLK on a dip, and I'm still in them. It's the only thing I'm in terms of stock market exposure, is staying long tech. I bought this back in April. I sold calls once, didn't they expired worthless, sold it again, and I decided to buy back those calls I sold. I'm still in the trade. It's the only one I can really see right now. I would love the rotation trade, but I've got to see some proof of it. And at the same time, I'm trailing stop on this because if we don't see the rotation, if we don't see broadening out soon, I think it's a problem. I think it's an issue to have just such a narrow leadership for so long. So I am in the leader, but I'm cautious about it.
Yeah. And so in terms of your cautious, are you in with a stop? Are you in with protection? And again, look, man, this market's sitting here at 556. I'm looking at the SPY right now. I mean, 556, we're at, nearly 5,600 on the SPX. I don't know if we're going to see 6,000 on the S&P before we have a meaningful pullback. We've had 340 some trading days without a 2% pullback in a single day.
Yeah, which is
But
crazy.
some ominous signs out there would be that anytime we've had a 0.5 or 0.7% increase in an unemployment rate, usually it's followed by a recession. It's certainly followed by a slowdown. I think a couple things I took some note of on Monday. Right here's an interesting mark. So, we still have our sticky inflation. Let me see here. This is the running, unemployment rate versus non-farm. The trend of jobs numbers. Yes, we've had jobs numbers, but unemployment rate's been ticking higher. If we go to, I just pulled this morning from I think it's Opening Bell Daily. Monthly bankruptcies reached the levels that we haven't seen since the start of the pandemic. So we're seeing some companies where, and there's a lot of ways to kind of get through this, right? I mean, if companies are struggling, we could enter a phase of mergers and acquisitions. That's usually, one type of way to consolidate. And I mean, we're seeing high concentration in the stock market. So it makes sense that corporate America would also be looking for high concentration. You've got, those that are producing, those that are making money, those that have the cash flow could be buying companies that are struggling for some type of advantage, lower competition. I mean, we could have a pretty serious season of mergers and acquisitions, but it doesn't overlook the fact that we are getting a rise in bankruptcies. We're getting a rise in delinquencies.
Yeah.
I've got a buddy of mine that works with me. He had sent me, let me find his message that he sent me. We do a little session on Sunday together, and he sent me a message. Where's it at here? Mortgage delinquencies are on the rise, which I thought, okay. I mean, look, this isn't, big short type stuff. This isn't 2007, 2008, but things are happening out there that I know the market appears to be ignoring. And look, by no means am I trying to be like a perma bear, because that's the worst situation to be in.
Sure.
But here's some data, right? Recession in the US usually comes in within 18 months from the last Fed rate hike. Well, it's been 12 months. Right? It's been 12 months since the last Fed rate hike. We talked about this inverted yield curve from the 10 and the 2. And at 24 months, it's usually about the average when a recession hits. So, I mean, timing wise, we're talking about a potential rough fourth quarter. If this market's going to embrace a recession and price it in, Q4 is going to be rough. If this market ignores it, we get through the election cycle, we get through the year, and we have a solid Q4. It's hard not to be a little bit more jaded coming into 2025, but that's just where I'm at.
I typically agree, Chris. And that's the thing is, like, I'm like the most cautious bull that I've been in a long time. Like, because I actually think that if you're in the narrow camp, which I've pulled back to in the last month, I've kind of snapped back to, you know what? It's the only thing working. I'm going to trade the momentum until the momentum's gone and just stay in the trade, the tech trade that I've been in. I think it's almost a form of bearishness to a degree to just say, I'm just going to stay with the leaders and I don't trust the rest of it, because historically speaking, that can last some time. Narrow leadership, obviously it's lasted a long time here, but it can last a while. The Russell's like 4 years of vastly underperforming the S&P 500. The RSP is just up a couple percent on the year. Meanwhile, the weighted S&P 500 is up like 17. I mean, there are so many problems here that I see in the narrow leadership. And that is, again, why when you actually look at my actions personally, I'm long the only sector that I can really justify, which has the earnings, which is technology. Like they're, as you just mentioned, they could use all that cash flow to buy companies. The demand for chips is strong, but clearly that demand for chips, the AI trade, Chris, is not broadening. It's not showing up in the other areas. I'm concerned about the Russell. I want to buy the Russell so bad, but I am still waiting for the growth to materialize, and then I could build some positions in other areas, maybe buy the RSP, maybe buy the Russell. But I've got to see the growth stay strong and inflation come down. I'm just struggling with it. So that's where I'm kind of back to I'm long gold, silver, and I'm just going to trail stops on the one thing I have that's working, which is tech. But it's a tricky market, man. I mean, it's like, if you're not in the tech, it's like everything else. I mean, semis, technology, and comm services are up. Everything else is just, okay. I mean, it's not terrible, but it's just not great. So it's been a frustrating time. And again, I think that, to be honest, if you look at historically, like thin leadership usually doesn't end very pretty. So yeah, we need to either see the broadening or I'm going to stay pretty cautious about this market.
Yeah, I think that's a wise play. I'm trying to narrow my portfolio, but protect it. I mean, I'm looking for income gen strategies that
Yep.
allow me to
Yep.
still make money every 30 to 60 days. That's a way for me to generate the alpha, right? I mean, if I'm just long, I'm moving right along with the market, which is fine. I mean, like you mentioned, the numbers are staggering, right? We're up 17% for the S&P, 25% for the Nasdaq, but we're up 4% and 1% for the Dow and the Russell. I mean, they're
Yeah.
barely hanging on to positive gains this year. And what's crazy is Tesla, right, which was one of the most hated companies in 2024, is
Yep.
now back on the favorite list of it
Like
can't do
all those
anything wrong.
losses.
I mean, I
It's
just
actually flat on the year. I mean, in
well,
just
it's
a
at
week.
like it's like 1% positive for the year, right? Like, I mean, we went from like a 40% drawdown from the top to now it's back up where it's positive year to date, but it's up like 2%. But this thing has ripped like 40% in the last couple of months, and it's just unbelievable. Now,
Frank's in
technically
on that one.
speaking,
I have no Tesla. Do you have any Tesla, Chris?
I do have some Tesla, but I don't
Oh,
know if I'm going to
man.
reestablish positions on Tesla simply because I'm like, well, if I did some ratio spreads, I did some puts. I mean, my price level, my strike, Nick, is 115. I'm like, right now, I can't get the same amount of money for a 115. If I want to own Tesla, I want to own it as cheap as possible.
Yeah.
I was in this camp of we're sitting here at this, drawdown for the year. I'm looking at where would I own Tesla? $100. That was always
Mhm.
the number. I'm like, if I'm gonna own it, I'm gonna own $100. I'll justify the 10 grand cash or the 5 grand margin to own it, and I'll work the cost. And all of a sudden, we just balloon for the last month. Really, it's the last like 2 weeks. This has been crazy. Exposure. I'm not long with any shares. I'm just long with options, and
Yeah.
I closed out for some profit already. I had a leap that I closed out. It only took like 3 weeks, and I generated about 55% of the profit within the first 3 weeks of trading. Which it's
That's
a
awesome.
360-day option that I generated in like 20 to 30 days. So it's crazy how price can do that. And I just thought, well, for me, I mean, I can either sit for another 11 months and wait for the other 50% to come off, or I can just redeploy that capital, which is what I decided to do. But anyway, we're right back in the wheelhouse of this. Seems like tech. This seems like Mag 7. This seems like the market is still just embracing this high concentration. The divergence that we've talked about between S&P, NASDAQ, which is virtually becoming the same index. I mean,
Yeah.
it's not, but the only two are making new highs, S&P and S&P and the NASDAQ. Only two making new
Well,
highs. Dow is still
and just
struggling,
to
Russell struggling. So it's the same thing, man.
Yeah, just to add some context to what you're saying too, I've got it pulled up on my screen real quick, guys. The RSP is the equal weighted S&P 500. For those of you guys who are saying, why is the stock
Yep.
market, like if you feel gaslit by this market, if you're somebody who owns some industrials, if you're somebody who owns some healthcare, if you own financials, and you're saying, why the heck is the market so giddy about all-time highs, and I just keep hearing that, and my account's not doing anything? If that's you, then guess what? You are not alone. In fact, you are absolutely part of where most people are feeling frustrated with this market, which is why this market has had such a hated rally. This rally is like one of the most hated rallies I've seen in a long time. And it's because, this has been a year of momentum. If you've been in the ones that have been moving well and you've stayed in those, you've done well. And I'm telling you, I've not been in the right side of that for a lot of this year. Like I've been looking for, I started this year looking for the Russell, looking for RSP, looking for, and I did, pivot out of that at some point, but it's been a tough year. It's been like, if you're not in the names, you're just kind of on the sidelines. Now, the thing is, you can talk about that in hindsight and you can look at that, but the question is, where do we go from here? And to be honest, I think that the tech melt up can last some time, but to chase it is also a very foolish thing. So I'm not saying, I'm out here buying heavy tech right now. I'm saying that I think that, you've got to stay. I think it's prudent, as you mentioned, Chris, like narrowing what you're looking at,
Yep.
staying, cash heavy. I think that's a wise thing in my personal opinion. If I've got gold and silver, that's kind of somewhat uncorrelated bets that I'm doing. But if those get trailed out and we see a big correction in the market, I'll have some cash on hand. So I think that's a prudent thing to do. And I think that, the lack of broadening is a serious, but here's the last thing I'll say, Chris, and then I'm going to hand it off to Frank, who's joined the call. I'm going to hop off. Last thing I'll say is, somebody asked me what's going to get this market to actually pull back. Where would you actually see a sell-off in NAS and S&P? And I don't personally think, I mean, CPI, PPI could cause some volatility, but I think it's earnings season. Like if you actually get slowing in earnings, that's the one thing I really see as a possible candidate right now, because the Fed is still likely to cut rates as their next move. But if earnings slow down and you have thin leadership, earnings in those, I mean, if the big ones fall, it's trouble, right?
Of course. I mean, that's we're sitting in the house of cards for that exact reason. I mean, if you can, you imagine the darlings of Mag 7 that all of a sudden are disappointing with earnings. I mean, you would have look at Nvidia, of what it did when it reached like 3.3 trillion dollars in market cap, and then within what, 3 trading days it was down to 2.9. It shed $300 billion in market cap in 3 days of trading. So
And Chris,
it's that
that
type of
didn't even come
sensitivity.
on an earnings season. That wasn't even an
No,
earnings.
that was just trading. But I'm just saying, like,
Yeah,
that's when all of a sudden
yeah,
Nvidia's #1 in the world, and quickly it was not. So,
yeah.
yeah, the earnings season, and I think that the market, is expecting good earnings, and I feel like, man, if you better hope that you have these companies out there that are forecasting some conservative measurements, because if they're trying to forecast, look, if Frank's joined me a lot for earnings season this year, I've had a pretty good Q1, Q2 of earnings. Well, I should say it's Q4 earnings, Q1 earnings to date. I mean, I probably won about 80+% of my trades in earnings, but I'm also very meticulous on how I pick and how I price them out. And we've seen a lot of expected moves, if not beyond expected moves, which has made it very easy to trade earnings.
Sure.
I know it's summertime. I know it's slow, but man, those household names. I mean, we're going to kick things off on Friday with financials, and that's never like an exciting. I don't trade banks for. I mean, they're low beta and they're super low volatility, but they're kind of the leader when it comes to, they kick things off typically. What's
Mhm.
the strength of investment banks? What's the strength of these? The too big to
And
fail.
signals for the consumer, right? What are deposits looking like? What
Yep.
is savings looking like? Incredibly valuable stuff. And that's Friday. So this week is stacked on stacked on stacked. You got Powell today, Capitol Hill, you got CPI, PPI this week, you got bank earnings. I mean, it is a loaded burger this week. So Chris, I'm gonna step out. I'm gonna give you the floor with Frank for a little bit here.
Cool.
As I do that, I'm just going to let everybody know, if you're watching, if you enjoyed this commentary from Chris, do us a big favor. Make sure to go follow Chris. He has his own Discord channel. It's free to join his YouTube channel. You can find him on Twitter at Real Chris Pulver. And we'll drop the link to his channel here in the live chat if you're watching on YouTube. And if you're watching on Twitter, maybe we can, well, actually, it's just at Real Chris Pulver. So there you go. Chris, we're going to run a quick break here, and then we'll set you up with Frank. You guys got the show for a little bit. Is that cool?
Perfect. Thanks, Nick.
All right. See you back tomorrow. Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped, or find the link in the description of this live stream, and you'll be connected with someone right away. Now, back to the A1 Trading Show.
Hey, Chris.
Frank, what up, man?
How's it going?
Good. How are you?
Pretty good. Been a busy week so far. How about
Yeah.
you?
Extremely busy week. Most of it's after market hours, so that's not a big deal. But I get to be on the road today for about 3 hours after market close. So I'm looking
Doing
forward
what?
to that. I've got a loaner right now for my vehicle. I've got some things going on with my SUV, so I'm taking that in. I've got to go pick up some stuff. I got golf camp starting in the evenings this week. They start today, so all that fun stuff with that, all that side hustle stuff, all the golf camps, the golf instruction. So yeah, that'll be fun.
How's your arm doing, or is it your shoulder?
It's my arm. I'm actually going to get some physical therapy tonight. I've started some dry needling. I don't know if anybody's ever done that for physical therapy, but it was the first time in probably 4 months that I've seen some almost instant improvement. So I'm a fan, and I'm working with a good team. They're about an hour away. So yeah, going to do some more of that. I did play. I played 2 rounds of golf. I think the first time I shared, I shot 3 under. Second round, I shot 2 under. So maybe the next time I'll shoot 1 under, and it'll just keep getting worse and worse. But anyway, I'm trying to reestablish my handicap for the year. I got a big tournament coming up in November in the Tampa area, so I'm gonna try to go there and win some money.
Well, good luck on that.
Yeah, exactly.
You talking about shooting 3 under. I'm shooting like 5 over when I go out there.
Still,
But granted, that was once. I still have more.
that was once.
I've only played 18 holes once, so I need to keep playing, I guess.
Yeah. Well, I will be in your guys' neck of the woods again in August. I'm doing a conference with Tasty in August, so I figured I'd stop into your office again if you guys are around. I think the conference is going to be on a Saturday, but I've got family close enough that I might pop in and see you guys and do a little office visit again if you guys will have me. Yeah.
Yeah, we'll think about it.
I know. All right. Well,
We'll
I mean, I'm very best, I guess, if it'll get me in the door.
No.
So anyway, dude, what are you looking at this week, man? I was on the session yesterday. I think I came in around like 10:20 or 10:30, but I put some live trades on during the session, and a lot of it was around hedging. I wanted to share a couple of things with you if interested. I'm continuing to do this SPX, daily situation where I just look at the market. I kind of stabilize myself around a center price. Today on the SPX, I sold it around the 55.80 level. So, well, I should say I centered it rather around the 55.80 level. And so above it and below it, we've gone enough. It's only 10:41 in the morning Eastern time, and it's already enough to drain out that 15% take profit. So I've been doing this quite a bit on the SPX. I've had only one loss out of all of the days I started this back in the middle of June. So almost a month worth of trading, and I've had let me just count here. I think I'm like 16 out of 17 winners, so not too bad. And lesson learned on the loser, because that was a trade I took for the rest of the day. But I pretty much have a hard stop by like 12:30 p.m., 1 p.m. Eastern time. You got to be out of this trade regardless, and usually by 10:30, 11 o'clock in the morning, you're out of the trade for profit. So yeah, I still like that trade. I mean, you've seen me do that for the last month on the show. And it continues to be a trade that works out pretty nicely for this first little, chop zone. And anyway, so I looked at that on SPX. I've also been trading a lot more. I did request a commission reduction from Tasty on my futures accounts, because I finally got all my clients approved for futures trading. So I'm doing a lot more ES. I'm doing a lot more MES. I'm doing a lot more NQ, MNQ. Those are just future symbols. So thought it was interesting. If you want to take a look at a couple of things, are you interested in hedging, my friend? Because if you are, I've got some news for you.
Yeah, I'm doing it right now, kind of. I've talked about it with you like last week when I was saying I'm doing longer term, short calls, just longer term, waiting for any potential move. They're out of the money. They're cheap. It's not really. I don't think it would necessarily outweigh my weight to the long side, but it's something there for now just to protect. But if you have like another hedging idea, are you talking about?
So what are you doing? You said short
out?
Calls. Are you sure? How are you hedging again? You said short calls. That's not really a hedge. What are you doing again?
No, it's not. It's not a contract. I was just saying calls as in like different plays. So
Ah, okay.
I have
Okay.
I have long-term puts. I actually do have calls on the VIX, but they're not. You know, they're out of the money, and it's like a month out. And when they get to close to expiration, I just close out and open another call for a month out or something. So
Sure.
I take a little loss every single time, but if something happens where all my long trades on the SPY and um, different indices pull all the way back, maybe the VIX will help me out some. So that's kind
Sure.
of what I'm doing
Well,
right
that's an easy one. I've got two plays in the VIX right now, and then I'll show you what I'm doing on the ES. So it's the futures S&P. So for the VIX, I have two approaches here. My timeline is I think I went out through middle of August on one. Let me double check this here. So if I go to the VIX, here we go. So I have the August 21st 1050 call, and then I have a October 16th $20 call. Obviously, one is in the money, one is out of the money. The 1050 call is in the money. I was going for a 70 delta. Usually, when I'm long on something directionally, I try to go in the money so I can get that delta to essentially appreciate from like 70 to 100. What that means is that's the same as being long the stock. You can't be long the VIX, but you can trade options around it. So I'm long the VIX from that capacity. I don't know if I timed this well enough, with this in the money 1050 call. But I think I'm giving myself enough time for any type of, even a short term volatility event on the VIX that pops us up to, 14, 15. That might be enough to clear my 1050 call and get me out for a couple $1,000 of profit, just again hedge. But I think that a reasonable spike up, if we have a downturn or any type of meaningful correction, we're probably going to see the VIX spike up towards 20, which right now from a $12 position to a $20+ move, that's a 70% uptick in the VIX. Now, does that quickly get faded? You have to remember that the VIX is something that likes to mean revert. Stocks don't necessarily have to do that. So, I mean, we spent a lot of time this year looking at just crazy amounts of divergence between what's performing well, what's underperforming, and it doesn't mean it has to all of a sudden shift. I mean, that's the big debate this year: is tech going to mean revert to value? Maybe not, right? I don't know. But the VIX, it doesn't stay up forever. Even you go back to the biggest crises we've seen. I mean, 2020's COVID crash, we got to the same highs, if not higher than what we saw in 2008. We could spike up a lot higher if things get nasty. Problem is, I don't think that's going to happen. I think we're going to, if we have some type of correction, we break the streak of 340 some trading days with no 2% pullbacks in a day. If we have those type of days,
now. Has it
or
been
have
that
one of
long?
those days, then we'll see a big move in the VIX. But don't be surprised if we see a big move in the VIX that it gets faded right back down. So any type of correction that we see, obviously I'm kind of prepping for it. I'm not overly bearish, but again, I just can't ignore just the technicals that I've seen for years and years and years. I mean, you just see this lined red, like overbought condition. So I'll show it on my chart here. This right here, overbought conditions, overbought conditions, overbought conditions, overbought conditions, overbought conditions, overbought conditions, and it's divergence. Now, you might be saying like, well, that's crazy. It's clearly, that indicator is too early. Not really. I just go to a higher time frame. And this is where I'm at. So the last time we saw this thing print on a weekly time frame, it was right there, and we did have a top. The last time you see this print, we have it now. If I know you can't see it with my little wedge figure here, but there is overbought conditions with divergence on a weekly time frame. And again, the hardest thing to do is call that top. But this is why, just like you would have been following it here. Oops, that's not drawn very well. If you plot a trend line and it breaks the trend line, the market did sell off. So if I look for some confirmation, you and I have talked about this, the hardest thing is going to be to pick this top. You would mention, 5560 or I'm sorry, a 5600 on the SPX or, 560 on the SPY. That makes sense. But to me, the bigger, like obvious resistance zone is going to be in the 6,000s. If I'm going to short this market, I'm going to start shorting it at 6,000. Right now, this is the market that refuses to go down, the market that refuses to go anywhere but up or sideways. It's like sideways isn't bad, right? Sideways is just frustrating for traders that are like, is this where the top is going to be, or is this where the market's going to base again? I mean, I'm thinking of just been in these markets for a long time. It's weird to see so much into so few stocks. That is weird. What it does show us is that market can stay resilient in a lot of different ways. Maybe that's exactly how it was crafted. I know that everyone loves Bitcoin because it's supposed to be the greatest asset ever, and that's how it was created with limited supply. That's all changed with Mt. Gox, right? But we're sitting here with the S&P with market cap weighted and the Qs at market cap weighted, and you're looking at the top 5, top 10 holdings doing most of the work, most of the heavy lifting. So, I mean, to Nick's point before he jumped off the stream, I mean, earnings season is approaching, man. And so if you and I want to kick around some, week to week earnings, I'm happy to do that because I'm interested in some of the pricing. But here's what I'll say. Going into earnings season, if we see the market deal with like complacency, and let's say that the market sees a lot of as expected earnings instead of blowout earnings, that's going to be a tough earnings season if you're trying to get long, beyond the expected moves. I will probably take a different stance with this earnings go around and do a lot of the credit spreads and do the in the money credit spreads simply because it's way more cost effective. I'm collecting like 65, 70 cents on the dollar. I can go both directions and have it be where my biggest loss on one contract might be a couple $100. My biggest winner is going to be $400 or $500, something like that. And I can take profit pretty regularly. So I will probably stick to in the money credit spreads instead of those, kind of omni spreads or those, those kind of dual debit spreads. Simply because maybe we have, beyond expected moves for Q1, Q2 of this year. We're coming into Q3 to print Q2 earnings. I don't know, man. I guess I'm clearly clearly spewing some hesitation. I mean, I'm skeptical that this market can keep sustaining these runs, but I'm not necessarily turning full bearish. I'm just playing some hedges. So anyway, back to that initial thought, you're hedging on some short terms, you're getting some directions. I mean, I have a couple trades running right here. I'll show you. So the E-mini futures, this is the ES signal or symbol. I am going out. Let's see here. This is a pretty good looking trade. Most of these are, let's see here. This one is, did I pay for this? Oh yeah, that's just a long put. Okay, so two ways I'm playing this. Okay, I'll make this really simple. So I'm playing this two ways. One is I'm trying to get essentially a free hedge or a credit hedge, and then the other way is I'm just making it like a 20-to-1, really out of the money, ridiculous kind of almost like a black swan hedge. But I'll type this on the chart really quickly. So I'll put free in quotes because it just requires some options. But a free hedge is one way to do it, and I'll explain that. And then also and I'll put a cheap hedge.
Hey, what are your thoughts on Nike?
Well, I told you I'm long on Nike. And I'll come back to the hedging in just a second, but I'm long on Nike, but my level is going to be $60. And so as soon as we had that giant miss in earnings and we pushed lower, I mean, we're talking about below the lows of 2022. If we come back into this level at COVID at $60, I want to take some positions on Nike and be long.
That's where I'm
and
up
so
to.
I'd sit it with a leap. I just went out to the $60 put. I did a 60 and a 55. I think it's right here. Yeah, so I did a 60, a 55, and a 50 put. So those are naked puts. Those are cash secured puts. I don't mind owning Nike there. If I took 300 shares of Nike at a break even of $55, I'm confident from COVID crash lows I can repair that stock. So I mean, I'm willing to tie up some capital with that. I don't think I'm going to get assigned if we stabilize, but directionally, it's like what has been hit hard. It's like think about some of the momentum that we've seen here. What's been hit hard to the downside is still staying sluggish. Like Nike after this dump, we need to stabilize. But look, Nike took out all these lows. There's a really strong level support. So Frank, I think that we might just gravitate towards that level support to see where the buyers are interested in trying to find a dip on Nike.
Yes, but even then, they still have a awful projection for 25. So I like what I've noticed is that it's well, probably a little less now, but it's like 20% off its COVID lows, which is when this happened back in 2020. I was thinking we're never going to see prices here ever again. And like we missed our chalk,
Right.
but
Well,
now,
not so
now
much.
it's been on a 2 year drop and just, you know, the demand and whatever is just declining for this stock. But now it's back here. So I've been wondering, even if it does come down all the way to that low that you're
Uh-huh.
pointing out, what are the odds that it can bounce from, you know, in the span of like a year or so? I feel like if the company's going to continue to underperform and retails, their sales are just going to be really bad. Should we even consider the stock right now, or should we, wait for maybe an even better opportunity? Or are you just going to buy and then I guess sell calls and lower your cost basis or something?
Yeah. If I get assigned on shares at $60 or lower, I'm going to turn it into a wheel strategy where I'll sell calls against it. I mean, I'm not looking at this like I want long-term ownership on Nike. I'm looking at this as if I own the shares, see if I can make, $2, $3, $5 a share and then flip it. I mean, it's not something I'm looking for long-term gains. Same thing here. I mean, I look at this right now. I mean, if I looked at let me see if I pulled up let's look at like RSI. Let me bring up one more workspace here. Hopefully this doesn't water me down too much. Let me look at one more workspace on Nike. What's up, dude? Dog just roaming
Is
around
it
in the
red
background.
view?
Yeah, he's behind me. All right, so let's go Nike here. And I want to see if that daily weekly push to the downside got us into some oversold territory. So here we are. This is the daily chart on Nike, and we are pushing. So that push to the downside, I mean, that completely pushed our RSI into oversold territory, which again could justify a little bit of a gap fill. What's an easy way to do this, Frank? I don't want to buy a call necessarily because then I have to pay for that, and my break even is going to be higher. If I went in the money, and let's take a look at this one really quickly. So I can go in the money on a call and try to make the break even right around current price. And if price goes up at all, there's some intrinsic value we can build into that option trade. It's going to be expensive though. The other one would be, what if we just did a credit spread? I mean, the IV on Nike has to be reasonably high. No, I take that back, 22.6. But if I looked at Nike, let's say out 45 to 70 days, maybe 45 days might be the perfect time. I think if we get into September, September effect is usually September historically is the worst month of the year. So why? There's tax loss harvesting. It's coming out of the summer. There's profit taking going into end of the summer. And then people kind of reposition for, okay, they take losses, they clean the portfolio, and then look forward to Q4 starting October. But I think if I went out to September, I wouldn't love that. If I went out to August, I could probably justify the August 16th or August 23rd. I'm not sure when Jackson Hole is, but I do expect some volatility there. Point is, what would we look at here if I did a bull put spread? And it's awful. If I was going to say, like, right now we're at $74, could we just push a little bit lower? Yeah, maybe. But if I did an at the money, it's going to be probably 30 to 40 cents on the dollar. Let's find out. So for a dollar spread, I can get 26 cents of credit, which I don't love. For at the money, I can get 60 cents on the dollar, which is okay. So we're trading at 74.06. I could do a 74 by 73. I mean, Frank, this isn't a bad play, dude. By August 23rd, is Nike going to be back above $74 or not? That's one possibility. So you're making a stance to say, if this is above $74, which means from now until August, does this have a little bit of a push to the upside? We have earnings on Nike in September. So we have this runway where there's no real earnings to kind of stabilize this. There's no real catalyst outside of maybe the broader market, moving around, or the S&P as a whole moving around to maybe weigh on this sector and weigh on this retailer. But there's two ways I would think of it. This is a cheap trade, right? If I can get 55 to 60 cents on the dollar, that's not a bad trade. The odds of assignment, I mean, this would be a position I'm not taking assignment at $74. I'll take assignment at 60. But if it stays here at 74, stays around 74, stays above 74, this is an easy way to make 55 to 60 cents. So that's one way to trade it, and that's going to cost next to nothing. I mean, your buying power is going to be like 50 bucks. Okay, the other way would be if you wanted to buy Nike, let's say you did like a $70 call. Well, this is where you pay for the debit, but if we just stay where we are, you're going to be down about $1 if we stay where we are, which again is manageable. If we go up, this is what's kind of nice about this. If we go up and fill that gap, let's say we come in and find this little pivot cluster around $82. That's an $8 move on this instrument. If we fill the gap, we're talking about a $15 move. So if I bought a $70 call and we go up to, $82, that's a $12 credit, which would help me make about $6 to $7 of profit. If we go up towards $88, that's an $18 credit, which makes another $12 to $13 of credit. Does that make sense?
Yeah.
So, so in the money call, it's more expensive, but you actually would get more profit potential if price stabilizes. You kind of maintain. If price goes up to gap fill, you're not as sensitive to the time, right? Like if I do a credit spread, I need to see price stabilize for the next 45 days and stay there.
Yeah, I would rather do a credit spread than a straight up call option on this, because timing is going to be really tricky, and even though credit spread is timing, you're going to pay for it more if you don't do a spread like that. But
true.
Are you saying that, okay, so you're at 70 and then 75 or something?
Well, current price is trading around 74 bucks. So you're
right. So your call, you bought a call at 70, or this is the theoretical.
Yep.
Trade.
So there's two trades. One trade is cheap, cost effective. You would sell the 74 put and then buy the 73 put, grab about 50 to 55 cents. That's a very binary trade, right? It either goes up and stays above 74, make your money, make your 50 cents, or if it loses, you lose 50 cents. Big deal. It's a very straightforward trade. Time does not work against you in this trade, right? So if we stay where we are, you get your 50 to 55 cents. Awesome. You've got all the time until expiration to see if price stabilizes. The nice thing is, do you have to hang on to this all the way to expiration on August 23rd? Not necessarily. If price goes back up and fills the gap, this is going to be trading for probably a 30-cent debit, maybe a 25-cent debit, maybe a 20-cent debit. You can take some partial profits if price goes up. Okay. That's one trade. That's very cost effective, and time works in your favor because you're just getting more decay out of the trade in it to see if it stabilizes around current prices. Right. If you're looking for more profit potential, maybe you're not that excited about making 50 cents. If you're looking for more profit potential, but again, time sensitivity wise, this is going out, 45 days. If I took this out, let me see if I can do this to the end of August. I think that might be it. August 23rd. So there's no August 30th, unfortunately. We'd have to fill that in, but that's going to be, down the road where it goes like weekly options. So August 23rd looks reasonable. You're out 45 days. The reason I like $70 as a strike is because that's right around that 70 delta. If price goes up from here to fill that gap, you're going to get not only the intrinsic value that you're buying into the trade for. So look at the cost of this, Frank. So I take a $70 call, I'm paying $5.25. Well, that makes my break even 75.25. Yep. But if we come back and fill a gap, or we find a pivot, that pivot's around 82. Okay, 82 and change, or we fill the gap, we're coming up to 88.50 for structure. We fill the gap at 92 to 93. Is this a turnaround story for Nike? I think that's a difficult assumption because they were so pessimistic on their forward guidance that this is where I would say it's going to cost more and it's going to be a bigger risk because Nike doesn't seem overly optimistic about the next let's say 6 to 12 months. They could have a positive earnings print. I've got plenty of sneakers from Nike that shows that they're doing well. But I only buy stuff on sale. So maybe I'm a terrible consumer. But I think, the cost effective way to trade it is a credit spread. It's a win-lose. If I lost 50 cents, I'm not hurt by it. If I make 50 cents, I'm not impressed by that either. So I just think that's kind of the smart play for right now. And I would do the same thing here. If I took a trade now in a credit spread and it didn't go well and I lost, I would be willing to rearm that credit spread if we pushed lower. Right now, and again, I hate being super early to trades, but if we're right, get paid, awesome. If we're wrong, reload and maybe double the contract size. So if I started with 1 contract now and I lose and I get another 2 contracts, I do another 4 contracts, I've got the buying power to do that. I mean, I can turn this into a winning result at some point if I'm doing like those 45 to 60 day credit spreads.
Yeah.
So I'll tell you what, dude. Just since we're talking about it, I don't mind taking the trade. I'm going to try to get, we're at 74, 73. I don't like that this is a slightly in the money strike and I'm getting less than 50 cents a credit. So that's not ideal. I'm going to try to get,
I
so let me
don't
see if I
really
get
like this
55
trade.
cents.
I'm going to be honest. I wouldn't take a trade just because we're talking about it. Well, like 55 cents and this is a month out. I don't know.
Well, okay? So what's a month out? I mean, if we have a downturn, okay, so I take a 50-cent loss on Nike, and then, like I said, dude, if it goes down, I mean, again, get rid of this for a second. If this goes down to $60, I don't lose anything more than 50 cents. This stock can drop another, 18%, and I'm going to lose nothing but 50 cents on the trade. It's not a big deal. Now, the reason I'm not like lollygagging in the trade. I'm just saying if this goes down, I know my risk is defined, right? I'd much rather lose 50 cents than lose $5 and change. So and here's why this would be okay. If Nike just stabilizes and comes back up towards, $77, $78, $79, this credit spread's probably fine, And if it goes up and fills the gap, I'm obviously missing out on the direction, but I'm still getting a very simple trade that's risk defined for that 50 to 55 cents. And if I'm wrong, I can get back. What's that?
Sorry. If it can go down another 18%, what if you just did a put spread to the downside to $60? You did like 74 to 60.
So now you want to buy a put at the money and go down to 60. You're going to pay $2 for that put for potentially, $12 in credit, which is a great trade. But what are you fighting against? I mean, what are you going to fight against? You're going to fight against what the market always does, which is finds a way to justify buying stock. I mean, Nike is down, I get it, but when Nike is down on a daily chart with oversold conditions, when's the last time we were extremely oversold? Right here when we had a bottom and Nike ripped to the upside. Last time we were oversold, Nike was at a bottom, we had the upside. I mean, if you just look at this chart, this goes back, to 2022. That bottom right there, we went up from there. That bottom right there, we went up from there. That bottom, I mean, anytime you've seen it oversold to this degree, price has gone up. So that's a good sign. Now let me take this one step further. Go to the weekly chart. Okay, weekly chart. Weekly chart, you can see all those like previous levels we haven't quite ever reached overbought or oversold on the weekly chart. So I don't know if we're going to see oversold conditions on Nike on the weekly time frame. If we do, we're probably coming back into these COVID lows. So maybe the weekly is like I could be more patient waiting for the weekly, but we might not get it. This bottom here, we didn't hit oversold conditions. What's interesting on this little look is price was here, price is here, and we're barely making a nudge with momentum. So I know that we pushed down lower, but I mean, if we go any lower here, Frank, I'm going to be looking for divergence on my momentum oscillator, and I'm still going to be long on Nike, dude. So your put spread is cheap. If you did the debit spread, pay $2 and get $12 of credit, you need price to drop. Is Nike going to fall another $12? Maybe, but I don't think so. I mean, this was a bit of an overreaction. I could see price stabilizing, and I think that maybe a credit spread. And also remember, it's IV contraction, right? When the earnings came out, IV was really, really high. Over the last, what looks like maybe 5-10 days of trading, the IV's shrinking and contracting. We're only at 22 on the IV rank, which isn't that high. So, anyway.
I think I'd rather just buy it, to be honest, instead of trading it, trying to guess where it will go in the next month. I mean, this is lower than I thought I'd ever see it again. So
sure.
Why not just buy it?
Yeah.
But yeah, I'm not really so far this week. There hasn't been much. I closed out on my gold trade. Well, I guess I got trailed out of it.
Okay.
So there isn't really much going on yet. I think going into CPI, it might just be like this, where the market kind of looks like it's going to shoot higher and then it pulls back and then remains sideways. But I think I might just wait for CPI because that's pretty much all that we'll need to know for the weeks going forward. But yeah, so
Yeah.
it's been
I
kind
mean,
of
this will be the big round of data. So we have CPI this week, right? CPI PPI combo this week. And then after that, like it's going to be kind of the silent window of it's going to be filled by earnings, right? So I mean, from this week's CPI data, then it's going to be earnings season kicking off, and then we're going to be we'll be having this conversation at Jackson Hole in August. So that's really the gap fill. It's this week's CPI. Maybe that moves the needle on the CME watch tool, right? The Fed watch tool. Is it making it a higher probability or lower probability? Then you fill in the gap from now until Jackson Hole with all earnings. I mean, I think the market is expecting good earnings. I think that's the overall consensus. But I don't know how the earnings season is going to be a broad market lift. I hope that it is. If the market's going to continue this rally, we've got to have a broader market participation, in my opinion. Otherwise, it just seems like we're in these, 100th percentile of concentration, and that to me is room for it's reason to be very cautious. That's all. So not bearish, just cautious, just very cautious. So anyway,
you have
Nike.
all the reason to be cautious.
Yeah, and I am cautious. And so the other, I mean, let's go back to the original conversation, which I said about hedging. So I said there's a free hedge and then there's a cheap hedge. So futures up again the last 4 or 5 days of trading. These are my levels. I think my text just disappeared here. But my hedge is, so in yellow, I'm essentially doing a put spread. So I bought a put here. Okay, I bought a put here and I sold a put here, and then I have a naked put here. And so that area is a trap where I take the trade and it looks like this. So because it's a naked put, there's potentially undefined risk, but I've got a stop loss on that put anyway. So it's something like this. It's going to be, there's my risk, there's my trap, and there's my credit. So that's how the trade is constructed, where price is up here. Right. So price is way up here, and price can fall. I mean, we can fall like double digits for me to have any type of risk in the trade. We would have to fall 9.5% in the next probably 30 to 40 days in order for that trade to be threatened. Otherwise, it's going to be an income trade where if it does nothing but go sideways or go up, I'm going to make like $100 a contract. And if it goes down and comes into this yellow box that I have here, this is where I start to max out some profit. This yellow box can pay me up to $4,000. So I'm already getting about $100 of profit if it goes sideways or up. If price goes down and falls below this yellow box, then I'm looking at maybe $2 to $4 grand of profit. So I'm 2 to 4K in profit. Okay. And then my, potential assignment, I'm not taking assignment on ES because it's a $5,000 instrument. I don't care if it's futures or not. I'm not taking assignment. But that's where my position is threatened. We'd have to fall 9.5% for this to be like, oh, fudge. So I think over the next 30 to 45 days, anything is possible, but that's highly unlikely. This trade is already showing me a 99% chance of profit. I don't see that change a lot. So anyway, that's what I'm doing. So I've got some of those out for, August and September. I've got some of those out through September, October. I'm trying to do it where it doesn't cost me anything. The other one that I have is just the cheap hedge, which is I'm way the fudge down here. I did a 4,800 put. I think I paid maybe $500 for this trade. So I think I paid $500 for this trade, and it pays up to $20,000. If we have just the SHIT trade, it's a big payoff. So it's just something where it's like, I don't want it to cost me a bunch. I'm putting on 0.5% to 1% risk on the trade. I know that I'm risking on a hedge, right? If I hedge, it is to make sure that if something happens, my hedge is helping me wash away the drawdown. You know, if I see the whole market go down, I don't want my portfolio to be dollar for dollar going with it. I'm trying to reduce that correlation. And for that instance, you know, hedging is important. So anyway, that's what I'm doing. ES is a good way to do it. VIX is a good way to do it. I probably tied up about 2% in hedges that pay off maybe, you know, 15 to 20% in returns. But of course, I mean, if my portfolio is down, even though I'm not really that correlated, if it's down as a whole, I'm still trying to just wash away some of the bad stuff and mitigate those drawdowns with some hedges. Anyway, that's where I'm at there. And then
Well,
go ahead.
What else are you looking at? Were you just trying to explain your hedge, or are you in
Yeah.
BABA too? Are you doing the wheel for that?
So Baidu is the one that I own. BABA, I just have some longer term puts on BABA. Baidu I own at $90, and this actually is repairing pretty nicely. Let me go into my platform here. So let me go to BABA. So look, I know that here's my stance on China. I'm early. I say early, but basically I just saw a nasty price reversal from March's rip. March was great. I made a ton of profits in March. Had actually China profits carried into April as well. I had a great May for the portfolio, but since we saw the peak right here, this is a peak in BABA around April, May. You know, we've had a huge retracement. Now, like I said, I'm probably early, but I look at the technicals here, and I'm still interested in getting long on this stock. Now, you know, we came back down to, you know, below $90. We have lows here $80. If this actually settles in for a double bottom, I will be putting more positions on for that type of trade back up towards 150. You know, I do think China, for all the geopolitical tensions and the optics of it's uninvestable and all this other crap, I'm still trading China simply because I like having some non-US correlations. I like having some world exposure. And I do think that technically Baidu makes a ton of cash, makes a bunch of money. So does BABA. I think these are companies that are big enough that they want Western money. And I like the technical setup. So anyway, I own the shares right now. You can see right here, I've got break evens. So I took some assignment. I own the shares around $97 for some of my managed accounts, and I personally own it at $90. And I've got it covered out to like 102, and I'm just hanging out right now. So I'm trying to make some, you know, I'm trying to lower the cost and repair the trade. Here's the position on BABA, or I'm sorry, Baidu. Yeah. So we're at 92.18. I put in a collar trade on this where if it dropped below 80, I'm getting paid on that. Otherwise, it's financed. So I have a covered call at 110. That covered call financed the put at 80. So I own the shares around 97. If they get called away, they're getting called at 110. So I'll make, you know, 12 to 13 bucks a share. This is out to August, so I'm just going to sit on this for right now. But I will continue to kind of collar this and give myself maybe $5 or $10 of upside. What I'm trying not to do, Frank, though, is choke my profits out. If all of a sudden we start to see that, you know, this is starting to head higher, I don't really want to shortcut, or I want to shortchange my profits, because I think this has potential to be a 150 to 160 stock. And if this is a double bottom, this is kind of what I'm hoping for. If this is truly a double bottom, and it's not there yet, but if we double bottom here, not only do we get to this level, that's target 1, but we double that move, and that's target 2. This could be a, I mean, from 80 to 150, that's a, let's say a $70 move. Tack on another 70 bucks on top of that, we're talking about $220 stock. If I own the shares at 90 and I can hang on to this thing to 220, I'm pretty happy with that, as anybody would be, you know, but it's going to take time. So whatever, that's just some other stuff I'm playing that's not US, right? Nick's long on tech, and that's awesome. I'm looking elsewhere. Like, tech is great, but it's so concentrated that I'm trying to protect the portfolio. I still have some gold, some silver. I have some China stuff. I have some, you know, some value stuff. I've got some energy related stuff, commodity related stuff. So I'm kind of all over the place right now, but that's kind of the point, is reducing some of that correlation, but a lot of future stuff. So yeah. Anyway, well, I feel like I'm with you today with all these random things.
Yeah, I mean, it's good to know. I'm kind of concentrated too, so I mean, it's good to have another perspective on things. I do think you're right about the China trade. You know, it just keeps getting beat up, but
Yeah.
eventually, I think it's ripe for a turnaround. Just because I think China's economy has a lot of potential, but it's hard to back China when you know that their government at any time could step in and a company could go to zero. They could say, no, we're no longer
Yep.
letting this company run a business. So
No.
that's the fear in China, because they have the power to shut things down, unlike the U.S. So there is that, but you know that it's not in their best interest to do so. So I guess the odds of them actually shutting down Baidu or Alibaba is kind of low.
I mean, I think it's low. But again, that is a risk associated with it, and I understand that that's a risk I'm willing to take, and that's what those risk I have to take. But I think, again, this is just my opinion here, but I think on the surface everything looks contentious, everything looks adversarial. But I do think that world number one, world number two need each other a lot more than they really let on, right? I mean, we need China as a producer and manufacturer, and they need us as a consumer. And if all of a sudden we stop buying from China, or we, tariff the crap out of everything in China, okay. I mean, there can be tensions and trade wars and what have you, but
Like 2018, I remember that.
right. So I mean, it's like, but I still think that you can't be world number one without having some type of global presence. You can't be world number two without having a global presence. I mean, you could see this, alignment of, okay, all these countries are going to align around China because it's a non-US play, but I don't know how many developed nations are going to align around a communist country, and I'm not saying the US is always going to win out, but all I'm saying is it's an interesting dichotomy, or like a yin and yang. It's like China offers things that we don't have. Ethically, if you think like, oh, their labor costs are so much cheaper because of child labor or things that are ethically wrong and gray. Okay, so we have different standards, right? But this is how their country operates, and if those are margins that multinationals still consider going into when they do business in China, what do they want? They want cheap labor, they want padded profits, they want higher margins. If we know one thing's greedy in this world, it's going to be corporate America. You can drink the ESG Kool-Aid all you want, but stocks that are ESG and all ESG, they're not performing well. I think that stocks perform well right now. It's stocks that make money, stocks that have margin, stocks that have cash. And so, I mean, I've literally seen, historical portfolios on, they call it like the dirty portfolio, which is just your alcohol, your tobacco, your defense and aerospace, your war, like anything that's really dark and seedy. Those stocks actually make a lot of money and have a ton of cash. So it's different stuff. But anyway,
Good points.
different strokes for different folks,
Well, look, Chris, we've been live for 2 hours. I think I'm going to call it for me, unless you want to stay on. But
I'm good. Let me do this. Let me go for another. I'm good for like 9 minutes, dude. You want to hang with me for 9 minutes? I was just going to walk through some technicals for everybody.
Yeah, sure.
All right, you're hanging out for 9 minutes.
Why
All right.
not?
Frank's he's gonna rally. All right. All right. US 30. That's the Dow. All right. So let's do a little rapid fire segment here. Let's go through some charts. So Frank, you see some comments, just to throw them out at me. US 30 is essentially the Dow. I think, I like it. I've been disappointed that the Dow's been underperforming, considering this rip to the upside was so good on the Dow, and it's fallen flat. Now I see this is one little bit of optimism that I could have for the market. If we see a broader market, I know that the US 30 is not a broad market, but this is also a fair price weighted index, where if we blow this top off, that is an ascending wedge that I think has, good upside and a broader market rally written on it. The issue is if we don't blow those tops off and we just keep going sideways, this is going to narrow so much into a corner that we've got to have some type of decision. So could it break down? Yes. Could it go higher? Yes. And that's essentially what I'm dealing with right now. I don't know what to do on the Dow outside of stay out of the way, right? So my positions, I've got ratio spreads on the DIA. I've got out of the money puts. I'm just trying to generate income, because if this stays sideways, time works in your favor if you just out of the way, collect some income. And then when it makes a decision, it'll make a decision. But eventually that decision is either a break to the downside or we blow these tops off and off we go for another rally. But I don't know, and that'd be an interesting rotation if all of a sudden the Dow started to pick up and outperform NASDAQ like it did, on this little stretch. This little stretch here, the Dow was actually performing better than the NASDAQ. The drawdown was more contained than NASDAQ, but NASDAQ has now blown off those highs again, and the Dow has not. So not bad. All right, so that's US 30. Dollar index, I keep getting some requests on dollar index. Swiss pairs, yeah, Lee, you know what I'm doing there, right? I'm just long against everything the Swiss except for the Swiss yen. DXY, Frank, I've kind of made an executive decision this week in my Forex trading. I don't think we're going to have any clarity on the dollar, period. I've noticed that my trading this year on the dollar has been individual currencies, not necessarily baked in on the dollar basket. I think this level, these ranges that I still have, I think there's more clarity on the dollar probably coming out of summer, maybe September, maybe October through November. I'd like to see the dollar do something else. I'm kind of exhausted trading the dollar. I think it won't make up its mind. Individually, I see the Aussie dollar looks pretty bullish. The euro dollar is a bit of a mix. That's your heaviest weighted currency anyway. The pound dollar is up near highs. The New Zealand dollar, I was almost stopped out, but I'm still like fine on the trade for right now. I'm like down 20 pips. Dollar CAD is on the brink of it's holding support, but if it doesn't hold, like that'll be another ugly trade. Dollar Swiss, I'm long. Dollar yen, you could be long all day, but it's a mix. I mean, it's not an easy trade to say dollar strength, dollar weakness. It's not that simple. So I think that we still keep watching for maybe something like this, maybe some indecision that's happening on the dollar, and eventually we get a more clear confirmation of one way or the other. Now, what would be the dollar strength reason? We'd have to have a stock market sell-off, in my opinion. Stock market sells off, dollar gets stronger, yen gets stronger, risk off trading. Dollar gets weaker, market maintains a rally, dollar takes it in, takes a punch in the nose, and we have risk on with weaker dollar, and the stock market is the beneficiary from a weaker dollar and a Fed that's cutting rates. So I'd like to see a little bit more clarity. Again, we don't really know until September, probably. I would think that the market's trying to price this stuff in, but the Fed is so consistent. Every FOMC meeting minutes, a 2-day testimony, Fed at the end of the month. I mean, we have enough news in the Fed that the market's not quite sure what to do with the dollar, and I'm just not loving it. So there's my dollar stuff. All right. Anything else you're liking, Frank? A couple more minutes.
No, not really. Like I said, I'm not really looking at anything right now. Once I close out of gold, it's hard to justify getting long on the SPY at these highs. So whatever trades I'm in, like I'm just kind of holding them.
Okay.
Yeah, I'm just.
How much ownership do you have, by the way, in your portfolio? How much owned stocks do you have?
I would say so. In my Roth, I don't know the exact number, but I think I've got like 70% in the market right now.
Okay. And then 30% what? Is it 30% unallocated or 30% are you in like a T-bill?
No, so I would say 70% is in the market, and then maybe 10% is sort of a hedge. The rest is cash.
Gotcha. Okay. If that cash is going to stay, you could consider doing this. Depends on the broker, but this is a pretty good instrument to trade. This doesn't fluctuate a lot. This fluctuates, a few percentages here and there, a few cents here and there. But this is essentially a short-term treasury. So your 1 to 3 month T-bill would be the same as let's do US03Y. I don't need 1 to 3 year. So BIL is 3 month. So US03MY, that's month yield. If you had an unallocated position, you're getting treated to roughly a 5+% yield on those on that unallocated cash. So I mean, you're essentially taking cash and putting it into BIL, but every quarter you're getting a distribution on that. Take 5%, split it over the quarter. It's not bad for unallocated cash. If you got 5% quarterly, you're getting a 1.25% return on that per quarter. And again, that's better than just having it sit in cash and do nothing. So that's not a bad way to actually allocate some unallocated cash, and it's super liquid. It doesn't fluctuate a lot. So I mean, if you're down a couple of cents. Doesn't really change much, which is the point. It's essentially just parking cash somewhere, letting it have some yield, so it's unallocated, and then you can pull it and apply it when needed. So that's a pretty good spot. Just saying. So
Yep. Maybe I'll.
All right, dude. You want to get off 7 minutes ago? I'll let you go.
All right. Thank you, Chris. Thank you
Frank,
for letting me get.
I promise I'll entertain you more. I'll entertain you more later.
No, I'm just sleepy. It's one of those days. But
Gotcha.
Yeah, thanks for hopping on and staying on for this long, and thanks to everyone out there watching. We still got quite a lot of viewers for the past 2 hours we've been on. So thanks to everyone.
For sure. We should always have a lot of viewers, man. This is good stuff all the time. Whatever segment we are in, whatever guests we have, it's like, this is always good stuff. So as always, thanks for jumping in, and we'll see you later. Thanks, Frank.
Yep. Thanks.
Bye-bye.
See ya.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn.
Are we still going?
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.